Credit Essentials workshop we're going to have here for some great information that is available through Mr. Mike McNamara. If you do not know Mike, Mike's been in the business, I think, doing credit reports since I believe it's 1985. Mike, I won't tell him how old you are, but that's the deal.
Yeah, well, it's 1985, but I started when I was 6 years old, so I'm not that old.
All right, beautiful. Anyways, Mike actually did the very first credit report I ever ordered, believe it or not, and I started in '87. So it was a little different back then when credit reports came in. There's no such thing as credit scores and all that good stuff. But I wanted to just let you know a little bit about Mike. He's been doing credit reports for a long time. He worked for United One Resources. And then he actually did come join Southern Trust Mortgage almost about 3 years ago, and has been a great asset to us in helping our guys understand what credit reports are all about, how to read them. He's helped processors read them, underwriters, closers. So he is like the what if thing. He's like the live guy. He's like the what if guy. What if something happens? How do you do it? So he's been very good. Mike has done credit reports TransUnion across the country, and he's very experienced at doing them, just as you know, Experian. And he's going to give you the facts, Equifax you all the good information today. So without further ado, I'd like to welcome Mike McNamara to help us all understand a little bit more about credit reports. Take it away, Mike.
Thank you, Dennis. And thank everyone for joining us today. The Maryland Mortgage Bankers and Brokers Association, we're trying to put together quite a few little videos and some informational things that will be available to members at our website. And Amanda is doing a great job of putting these together. So please, if you're not a member, please get your organization signed up to be a member. If you are, take advantage of our website and the new information that we have at our website with some of these informational portals that you'll be able to find, again, at our website. I'm going to share my screen. Hopefully everyone is online where you'll be able to see some of the flyers. I will talk about them as well. Somebody give me a heads up that you can see my screen now. It says score models. All right, great. Thanks, Catherine. So this flyer talks, I always like to start off by talking about the scores and the models. There's so much confusion about scores today because everyone's getting a free copy of their report. Credit Karma or Discover's giving you your credit score, your bank. You can get your score just about anywhere. I like to categorize them in two ways. A consumer score and a mortgage score. They're not really called that, but that's just how I'm characterizing them today. And a consumer score would be something that's a soft inquiry. And I'm going to talk about inquiries in a couple minutes, but a soft inquiry means you haven't applied for new credit. It has no impact on your credit score. So when you get a consumer score from Credit Karma or from Annual Credit Report, when you get a free copy, that's a consumer score based on a soft inquiry. It is calculated completely different than what mortgage lenders have to use. And I'm going to show you in a second. The bottom part of this flyer is what I characterize as the mortgage scores. And the mortgage scores, we have to use specific models. And you'll see Experian is FICO version 2. That's very old. Credit Karma uses FICO 8. So there's much more, there's newer versions of the score models. And again, they're calculated completely different. We have to use TransUnion, FICO Classic 4, and Equifax Beacon 5. These models are designed for mortgage lending. These scores are going to be different than Credit Karma. So when consumers come to you and say, wait a minute, what do you mean my credit score is 700? My Credit Karma says 730. This is why. Completely different models. Again, there's different models for cars. There's different models for rental. There's all kinds of different models out there available. In lending, we don't use these Credit Karma models, the FICO 9, the FICO 10, the new models that are out. We have to use the models down below. So hopefully that helps eliminate some of the confusion about the scores. If you have buyers that come to you and are confused, this is a good little flyer that you could use to kind of explain to them exactly what's going on there. So any questions on that before I move to the next slide? Feel free to interrupt anytime if you have a question. We don't have a whole lot of people on the call. I'm going to share my screen again here with another flyer. So there's really one website that I recommend everyone go to. I'm trying to find the flyer here. Bear with me a second.
Hey, Mike, I have a question.
Sure thing.
From the Maryland Mortgage Program perspective, we have a lot of consumers that are required to take the home buyer education, and they'll come back and tell us, oh, the housing counseling agency told me that, I don't qualify or my credit score isn't. Do you know what the housing counseling agencies are using when they're pulling credit?
My guess is they're probably doing a soft pull because they're not applying for anything at that point.
Okay.
So they're probably using a higher FICO 8, FICO 9, probably.
Okay. Okay.
Say for sure, but can you see the next slide? Mortgage inquiries and credit scores. Okay, good.
Hey, just one thing, Mike. I just want to let everybody know that this is being recorded, just so they know for the future.
Right. I think Maryland law, we have to say that, right? So mortgage inquiries, and I'm going to talk about a website that I want everybody to go to as well. A couple websites we're going to talk about, but mortgage inquiries are not considered by the score until they become 30 days old. So if a buyer ever says to you, my score just dropped 6 points because you pulled my credit, you can tell them that's not the case. Now, their Credit Karma score might have dropped 6 points because that model counts inquiries much more than the mortgage score models. But mortgage inquiries are ignored for the first 30 days. So what that means is, how are they ignored? Well, every lender that uses a credit reporting company, that credit reporting company has an account number with Equifax, Experian, and TransUnion, and embedded in that account number identifies the reason for the mortgage. The reason for the credit pull is for a mortgage. So all the mortgage inquiries are grouped together, and they are ignored by the scores for the first 30 days. In addition, because all those mortgage inquiries are identified, the credit bureaus sell those mortgage inquiries, and your buyers get hounded by lenders all over the country as soon as you pull their credit report. Well, we're going to talk about how to avoid that and how to stop that in a minute. But I wanted you to know that the inquiries for mortgages are ignored. So that's called the 30-day exclusion rule. Also, if you read down a little further on this flyer, you'll see that, let me get rid of this, this view, it's kind of hiding me here. Okay, you'll see that there's also something called rate shopping. You could shop for a mortgage for a certain period of time. It's called the 30-day rule. I'm sorry, it's called the 45-day rule or the 14-day rule with Experian. So Equifax and TransUnion count all mortgage inquiries within a 40-day window as one hit against your score. So what that means is if your buyer went to 6 different lenders within a 2-week period, all those inquiries are going to show on the credit report, but they only count as one hit against the score for those 45-day windows. Experian is a 14-day window. And the only reason is because we're using those older models. Experian does have a 45-day window with a newer model of the score, but we can't use them yet. We're required to use these models. If the inquiry is outside of that window, it's still a very minimal impact. The point I would make about mortgage inquiries is that people freak out about inquiries, and really they don't have a huge impact on the credit score overall. And these 2 rules here, the 30-day exclusion for the mortgage inquiry and the 45 and 14-day windows, are helpful when you're talking to buyers about if they're worried about multiple inquiries or another inquiry. I don't want you to pull my credit report because my score is going to drop type thing. Hopefully this will help explain it to them that, and ease their fears just a little bit. So I mentioned that the credit bureaus sell our information. I encourage everyone to opt out. It stops the bureaus from selling our information. So those mortgage inquiries that are all grouped together and they're sold, as soon as you pull your buyer's credit report tonight, they get 6 calls from lenders all over the country. This stops that from happening. Optoutprescreen.com. It also helps eliminate a lot of the junk mail because those folks that are trying to solicit you to open new credit, it stops that from happening. You'll still get some junk mail because your existing creditors can still do soft pulls. They have the ability to do a soft pull, and if you have a home equity line with a bank, that bank can solicit you for a auto loan. But in general, it'll cut down on a lot of the junk mail. It'll stop your buyers from getting triggered calls, trigger leads, because the bureaus sell those leads. And it just, overall, it's good for you to get out of that junk mail because I've seen fraud. I'll talk a little bit about fraud today as time permits, but I've seen a lot of fraud from that junk mail that comes in the mail and someone steals it and opens an account, never pays it off. So I wanted to make sure you did that. This flyer, and again, I know I'm going fast, but we only have 30 minutes and my class is 2 hours usually, but obviously I'm not going to cover everything that I cover in my Realtor CE classes, but I'm just trying to touch on some high points. I mentioned there's a few websites you should go to. Besides opt-out at the bottom of this flyer, I encourage everyone to go to annualcreditreport.com. This was a site mandated by the government, not the ones you see on TV with the guy playing the guitar. Annualcreditreport.com. Right now, because of the pandemic, it's weeklycreditreport.com. You still go to annualcreditreport.com, but they're letting you get a free copy of each of the 3 bureaus once a week for the next year because of the pandemic. I encourage buyers, go here first before you apply. You're still shopping for a house, check it out. See if there's anything on your report that's inaccurate to try to get it resolved up front. When you go to annualcreditreport.com, it'll ask you, which one do you want? Get one of them, Equifax. It answers some security questions. The report will pop up on your screen, and you don't need to get the score. It's a consumer score, and they'll charge you for it. Just get a free copy of your report. Then go back to annualcreditreport.com and ask for TransUnion. Then go back and ask for Experian. Get them one at a time. It gives you report numbers. You can actually file and start investigations online now with that report number, but you have to start at that portal. You have to be at Annual Credit Report. You can't use the mortgage company's credit report. So it's a way to get things fixed a little quicker than it used to be. Again, right now, because of the situation we're in, they're allowing us to get a free copy once a week. So if your buyer paid something and you want to find out if it's been updated yet, have them go to annualcreditreport.com, get a free copy of their report, see if it's been fixed yet or something, because now you can do it once a week. Take advantage of the situation as we have it now. And then a couple other bullet points on this flyer. I've seen buyers close accounts. That hurts your score in a lot of cases, because if you close a seasoned account that's been opened a long time, I would identify a seasoned account of one that's 36 months old or older. Your score will probably drop if that account is closed. So we want to try to prevent buyers from doing that. A lot of times buyers think they should go close a bunch of stuff before they apply for a mortgage. Be mindful of fraud. I wanted to touch on that. I see fraud at least weekly on credit reports. Be mindful, do some research. Go to YouTube and type in gas station skimmers. My wife got skimmed at a gas station. You put in your card, it tells you what to look for when you slide that card in the gas station pump. to see if they're skimming your number and cloning your card and taking it to Target and buying $600 of stuff like they did for my wife's credit card. So they can clone it just with the number. You can self-check out just about anywhere now. You know, nobody's asking for ID. Take advantage, read up on fraud. There's lots of ways to protect yourself. Someone asked prior to the class, is Credit Karma a good way to monitor my credit report? It's a fine way to do it, but I would recommend a monitoring service. We talked you know, a little bit about all the different things that have happened in fraud. You know, you can put a freeze on your credit report. But that prevents you know, anybody from seeing your credit. You can't apply for credit until you take the freeze off, and freezes can be difficult from time to time. I encourage everyone to have a monitoring service. You may have heard of LifeLock. They're a little expensive. You know, everybody knows Equifax got breached. Most folks' information is vulnerable. It's out there. You should protect yourself. Equifax offers a monitoring. I'm not a big fan of using. I would use, research it, find a good monitoring company out there. There's lots of them. LifeLock, All Clear ID. You could Google these sites. Nationwide, if you have Nationwide life insurance, I understand they have a very good monitoring service, inexpensive one. So there's lots of them out there. Freezing's okay, it protects you, but remember, you got to unfreeze every time you want to apply for something. Monitoring is an overall way to do it. This flyer here just talks about how to freeze and how to take freezes off your report. Pull up one more slide here, and then I'm going to open it up for questions. Actually, I have a couple more slides, but I get asked these questions quite frequently. What tips do you have for a person trying to increase their credit score in a short period of time? My answer was pay down revolving balances to 30% of their limits. Clear up inaccuracies such as invalid medical collections or lates on a trade line and request a removal letter. These are common things that happen all the time. Most buyers had no idea there's a medical collection on their report until they applied for a mortgage. There's good news. Google the National Consumer Assistance Plan. That's a website that you'll see that there's some new rules about medical collections. The National Consumer Assistance Plan. What are some commonly held misperceptions about how credit scores are calculated? We talked about this, the level of inquiries and secured debt, very little impact. You pay off a car loan, not much of an impact because it's secured. The two biggest things affecting scores more than anything else are unsecured revolving debt and negative items. Those two things. What are the most common mistakes people make while trying to improve their score? Closing seasoned accounts. We just talked about that. And paying all revolving completely to zero. Sometimes it helps to leave a small balance on there to show some recent activity. Is it possible to have a parent co-sign on a secured loan, apply for, absolutely. Co-signing, and it can definitely help people build credit. So these are just some common questions I get all the time about how to increase your score quickly in a short period of time. All right, I think I have one more flyer. Any questions so I can breathe for a second? Dennis, you got a question, don't you? Oh, you're muted. You're muted.
Mike.
Yes.
And you sort of saying that, and something that's really come up every now and then is when you're doing either a refinance or even a buy, you know, they don't report liens anymore. They don't report tax liens anymore. And then all of a sudden you'll get title work. So
Good question, Dennis. Yep.
Yeah.
So that's part of that National Consumer Assistance Plan.com. If everyone checks that out, there's new rules, and one of the biggest, and this was formed because of what you're saying, Dennis, and that's tax liens. There were a lot of issues with tax liens that were being reported that should have been released, that weren't released. So now tax liens are no longer on credit reports. They're gone. Judgment's gone. So we need to do some research with our buyer to make sure, so we don't find out when title work comes back, to make sure there are no liens, because they are no longer on credit reports. So that's a good point. You know, and there's new rules about medical collections that are helping us help buyers, help buyers clear those types of issues up that are arbitrarily affecting someone's credit score when they really shouldn't have been there at all. You know, and I talked a little bit about revolving debt. I just had a case where a buyer, you know, we pulled their credit report and their balance on their credit card was $6,000. The limit was $7,000. So it's way above 30%. Well, we needed to get that balance paid down. Well, the buyer said, I paid that down 20 days ago. It's off. I pay it every month. Well, you know, it's hit or miss. When we pull the credit report, that balance might still be there. So, you know, today it's there, tomorrow it's not because they paid it. It just depends when that gets updated with the credit bureaus. So that score was being held down even though that buyer paid it off every month, because at the time that we pulled the report, it was showing the balance. So we quickly got that updated to get the valid credit score because that account was actually paid completely off at the time. That was a good question though. Let me show you one example. Here's something you should look for. Everybody, can everybody see this? Someone say yes. No?
Yes.
Okay, good. Sorry, I couldn't see anybody. All right, here is a live example, and here's something that everyone should look for. Here's a credit score that's 550, 560, and 707. It's pretty crazy. Well, it's because of this one, well, two accounts, but really this one account. Everyone looking at credit reports should look for authorized users. This is an authorized user. It has an A here. That buyer did not sign for this account. They were added as an authorized user. They did not sign anything.
Mike, I don't know if we can see the screen you're talking about. Can anybody else see it?
Nope.
All right,
Nobody can see
so,
the-
sorry, I'm
Yeah.
gonna do it again, just a second. I didn't think you could.
Oh, really?
Hold on a second, my fault. I need to pull it back up real quick. Can you see it now?
No.
Okay, just a sec. Technical difficulties, sorry. See it now?
Yes, sir.
All right, good. Sorry about that. So here was a case I worked on. It had a 550, a 560, and a 707. Now that begs a question. Why is two of them 500s, one 700? Well, this authorized user is only on TransUnion and Equifax. They don't have to report to all three. In fact, if you Google, does a creditor have to report to the credit bureaus? The answer is no. Some creditors only report to Equifax. But this is an authorized user. I could add my child to my account right now on my cell phone to one of my credit cards and they wouldn't even know it. This child was never removed from their parent's account, which has become a past due account, which is terrible. It's a worst case scenario for a credit score. And you can see the difference. It's having a huge impact. Instead of 700 score, it's 562 middle score. So all I need is a letter saying they've been removed as an authorized user and I got rid of that account. Anybody want to guess how many points I got? There it is. 238 points for a past due authorized user account. I mean, that's something everyone should look for when you're looking at credit reports to see if there's any authorized users on the credit report, because it can have a huge impact on the score. We got 4 minutes left. I wanted to open it up for any questions. I know I covered a lot in a lot of short period of time.
I have a quick question, Mike.
Sure.
It's Teresa.
Hey, Teresa, how are you?
Good to see you. Okay, thanks. Hey, on that optoutprescreen.com, what do you suggest we say to buyers when we tell them to go to that site? What exactly is getting sold? Just the inquiry? Because people will freak out if you say your information's being sold.
Yeah.
So
That's
what's
a
your-
that's a great question. And there's a couple things about that website when you get there that I should have mentioned as well. So what's getting sold is inquiries, but also your information gets sold, your name, your address, your credit score, because they have to have your address in order to send you that junk mail. So everything but your social's not getting sold. It's basically name, address. And contrary to public opinion, whatever you put in to pull a credit report, not all that information is going. It's just the name, social, address that goes to the credit bureau when you pull a credit report, and date of birth when you pull the credit report. But they're not selling your social. They're just selling name. I mean, that's what's being solicited. So yes, some of their personal information, their name and address, is being sent to creditors so that they can solicit you for a pre-approved credit card. You're pre-approved for this credit card because your score is between this and this. So when you go to that website, it'll say, do you want to opt out online for 5 years, or do you want to do it permanently by mail? Well, we need buyers to do it online for 5 years, to do it quickly so it hits. And another reason is they're also going to have to do it when they move to a new address. They're going to have to opt out again. So it's best to opt out online for 5 years. And then once they get to their home, their new home that you're going to give them the mortgage for, then they should opt out permanently by mail. But yeah, and you don't want the inquiries sold, and you don't want, I think it's a good idea to stop getting junk mail. Some people like getting those mail, but it would help prevent all of that. But that was a good question. Thanks, Teresa.
Thanks, Mike.
Anybody else?
Mike, I got a letter in the mail yesterday that I was involved in a breach with a large local real estate company. Where there's no way that they, and their affiliates, there's no way I had anything to do with any of them ever. Where would that come from? Do you know?
Was it any of the, was it a local realtor?
Yeah. Yeah.
But one that you were on the board?
No.
Oh, okay. Because I know you were active in a couple.
No. This is a large local. They're more than local, but they're the DMV. They're Pennsylvania. They're several states. They got a mortgage company.
Could it have been that you did a transaction with them and your name was tied into a transaction, maybe?
I didn't do a personal transaction with them.
No. But I mean, as the lender.
Oh, sure, many.
Yeah, I mean, it's probably that your name got out there. Nothing.
Okay.
That's probably just your name. But that also leads to protection, using that monitoring service. I do have some other flyers that I could get to Amanda that shows you how to put a fraud alert on your report to protect yourself from things being open and in your name. You and I have talked about that before, Rich, some websites you should go to and where to call. If your laptop got stolen, you should do some things right away. So there's some things that you should do. But yeah, my guess would be, Rich, it was your name that was out there and nothing more.
Mike, if you've mentioned a couple of times to Amanda and the presentation, if we wanted to view the presentation, everything that you put up on the screen, will we contact you or Amanda, or will it automatically be sent to us?
It's going to be at our website. Is Amanda still on?
Yep, I'm here. It's going to be posted to the website probably sometime tomorrow morning. If you just log in and go to the member resource library, you'll see all of our training videos posted, and this one will be added.
Great. Thank you for sharing.
Sure thing. All right. If there's no more questions, we've reached our half hour. Dennis, do you have any closing comments?
Mike, you did a great job, buddy.
All right. Thank you.
Very good. Very good information.
Excellent job, Mike.
Thank you, guys. I appreciate everyone taking the time out to join us today.
Thanks, Mike. Great job, bud.